Hi, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for May 24th, 2015. This week I want to talk about the importance for traders to create a data map. There's clarity in data. It provides us with an overhead view of your trading strategy's effectiveness. By accumulating data on the trades that you make or the trades that fit the rules of your strategy, with as many characteristics in your study as possible, you can start to get a sense of what are the characteristics that lead to success and what are the characteristics that lead to failure. We want to look for patterns in the data. If you have hundreds of trades accumulated where you can study what worked in the winners and what failed to work in the losers. Now, the larger the sample size, the clearer the message. But ultimately, this data gives you an overhead view, much like looking at a map, of how well your strategy performs. So it's something that I'm doing on a regular basis, trying to get a sense of how can I make my trading strategies better. All right, let's get into this week's analysis. Here is the chart of the S&P 500. You can see this is a 1-month chart, 30 minutes per bar. And for this week, we pretty much went sideways. We broke out the previous week. We've kind of been going sideways in a very narrow, low volatility range. The buyers are still in control. A little bit of weakness on Friday, perhaps a concern going into the long weekend. That could set up for a pullback, but at this point, it's still a market that is just under the highs, and you can see that when we look at the weekly chart. But what also stands out is the lack of enthusiasm. The market has generally been sideways for 5 months with a slight upward bias, but the bottoms are rising quicker than the tops, and that is a sign that the buyers are just lacking in enthusiasm. We need a good, strong move to the upside to get the show of opinion from the buyers that they are motivated again. Notice the very low volume this past week. Very low volume here, again, demonstrating that real lack of enthusiasm. It's not that the market is bad, it's just not that it's exceptionally good. There's not a lot of motivated buyers in the crowd. The Russell 2000 small cap index has been holding that upward trend line. Still looks okay, but again, volumes are light and we're stuck underneath resistance on the small caps. On the Canadian market, we actually made a little bit of a bounce back this week, but we're still stuck under that red downward trend line in the short term. In the longer term, we're building that ascending triangle pattern, and because we're in the pointy tip of the triangle right here, well, that implies that we should get a break soon. As I've said in the past, it's kind of like winding up a spring. We've got this coiled spring that's ready to break. This market, both in the US and Canada, are these situations where it's just ready to break, but it needs that catalyst to send it out of the trading range. The small cap stocks in Canada, really the micro cap stocks that make up the TSX Venture, sideways pattern for 5 months. Not a lot of excitement, but at least they're stable, and at least we're starting to see some optimism build there. Treasury bonds and really the bond market continues to weaken, but the downward intensity is lessening, and I do think we could see a little bit of a bounce back in the short term in the bond market because prices are quite far below the red downward trend line that I have drawn on that chart. So look for bond prices to move up a little bit in the next week or two. That'll bring interest rates down. However, longer term, beyond just the next week or two, I do think that there could still be more weakness in the bond market. US dollar had a pretty good run higher this past week, but it is still below its downward trend line that started to build early in March. Now, I shouldn't say that that's a real strong downward trend line because long term, US dollar is in an upward trend, but in the shorter term, we do see that weakness. So this little bit of a bounce we saw this week probably is going to run into some resistance next week, and we could see the US dollar get stuck again. The gold market, obviously being hurt by the strength in the US dollar last week, but it's really an ugly market that nobody cares about. It's not that it's, again, that bad. It's just having trouble getting any kind of upward momentum. And so I think that generally speaking, you avoid the gold market. There are some gold stocks out there that are doing well as companies, and they look okay, but you have to be pretty specific with the gold stocks you play right now. Energy market, the oil stocks probably suffering a little bit of a pullback because oil is in a little bit of a pullback. You can see that it broke its upward trend line late last week, and it's still kind of in that flag pattern right now. You got to be cautious with this. If we can break the little red line that I've drawn on the chart right here, well, that could lead to another leg higher. So still keep an eye on gold, or pardon me, oil, because it could prove to be something successful if it can break through that red line. However, the long-term momentum here is still down, so we got to be careful. And finally, the volatility index really at all-time lows. Not all-time lows, but on this chart, the lows. Now this is the ETF, which will not look exactly like the VIX chart, but the message here is that there's no fear in the market. Investors are complacent, and just a real lack of volatility in the market, which makes it difficult to trade. You have to trade very stock specifically, focusing in on those names that come along that are trading on their own story and riding those, and not really playing the overall market, because the overall market's pretty boring. So long term on US stocks, bullish; medium term or short term, neutral. I do see some signs that we're maybe going to see a little bit of a pullback in the short term here. Canadian stocks neutral on both time frames. Gold bearish on both time frames. Oil bearish long term, neutral short term. While stocks continue to trickle higher, there's this real lack of volume and volatility right now. You have to look for alpha stocks and be nimble. Alpha stocks, those stocks trading on their own story, trading abnormally. There's no sign of weakness in the market, but complacency is a concern. Oil is showing a little bit of short-term weakness, which we should be cautious about, but with that strength in the US dollar, gold is still best avoided. That has been the Stockscores Market Minutes for May 24th, 2015. Have a great week in the market and trade well.